Okay, we're going to look at problem 9-5B, notes receivable entries. The following data relate to notes receivable and interest for Owens Company, a financial services company. All notes are dated the day that they are received. And unfortunately, this one's on 2 pages. So if we go to the second page, it says, journalize the entries to record the transactions. So we can go back. So all we need to do, this is a general journal. Okay, and our first transaction says March 8th, received a $33,000, 5%, 60-day note on account. So we're going to fill in our date, which is March 8th of the current year. Okay, we're receiving a note, so we're going to debit notes receivable for the $33,000. This is an accounts receivable that's been turned into a note, so we're going to credit accounts receivable for $33,000. Okay. We're going to be using these two accounts a lot during the rest of this problem, so I'm going to start abbreviating notes receivable as N/R and accounts receivable as A/R. Okay, you are more than welcome to do the same. March 31st, we received an $80,000, 7% 90-day note on account. So we have the 31st, notes receivable for $80,000, and accounts receivable for $80,000. May 7th, we received $33,275 on the note of March 8th. So we received $33,275 in cash. If we look back at March 8th, our note was for $33,000. So they paid us $275 extra, which would be our interest. So they give us the number. We don't need to calculate anything. So our date was May 7th. We received cash of $33,275. We're going to credit our note receivable for the $33,000, the same amount that we debited it up here. And we're also going to credit interest revenue, because we have made $275 of interest on this note. So up here they took the note out for $33,000. Down here they're paying the note and the interest of $33,275. Okay. May 16th, we received a $72,000, 7% 90-day note on account. So on the 16th, we have a notes receivable for $72,000. and an accounts receivable for $72,000. Okay, turn the page. Received a $36,000, 6% 45-day note on account. So again, the same transaction. Our date or month has changed to June. It is June 11th. Notes receivable for $36,000. Accounts receivable for $36,000. On June 29th, we received an $81,400 on a note of March 31st. Okay, so we received, we're going to debit our cash for $81,400. We're going to credit our notes receivable. They said this was from the note on March 31st. In March 31st, our note was for $80,000. So we're going to credit our notes receivable for $80,000. And then credit our interest revenue for the difference for the $1,400. July 26th, received $36,270 on the note of June 11th. So people are starting to pay us back now. So it was July 26th. We received cash of $36,270. We're going to credit our notes receivable. This was from June 11th. So on June 11th, our notes receivable was for $36,000. So we're going to credit this for $36,000. And then also credit our interest revenue for the difference, which would be the $270. August 4th, we received a $48,000 9% 120-day note on account. So August 4th is our date. We have notes receivable for $48,000 and our accounts receivable for $48,000. August 14th, we received $73,260 on the note of May 16th. So our date is the 14th. We received cash of $73,260. We're going to credit our note receivable. It said the note from May 16th. And if we look up here, May 16th was $72,000. And then credit interest receivable for the difference. Nope, interest revenue. Sorry, I got my receivables mixed up there for a moment. Interest revenue for $1,260. And then our last one, December 2nd, received $49,440 on the note of August 4th. Okay. So December 2nd, we're receiving cash of $49,440. Notes receivable would be our credit. It said of August 4th, and August 4th was $48,000. And then interest revenue. For the difference of $1,440. Okay. Because they gave us all of the interest numbers, it kind of made it a little bit easier. We didn't have to calculate interest. But again, if you did need to calculate your interest, it would be your principal times your rate times your time, which would give you your interest amount.